Hello from the European Chemicals Agency and welcome to this webinar focused on the size assessment of micro, small and medium-sized enterprises. My name is Lazarina and today I will be presenting this webinar together with my colleagues Sarah and Thomas, with whom I work for the SME team here in Helsinki. What you can expect from us today? First, we will introduce you the definition of SMEs and the benefits in terms of fee reductions. You will learn more on how to assess correctly the ownership structure of your company and how to make the size calculation. After that, we will go through the SME verification and the assessment process. Finally, we will show some practical examples on different ownership structures and how to correctly calculate their size. At the end of the webinar, you will find some important links and key messages. Please use this webinar to ask questions from our panelists. How to ask questions? Please join the question and answer panel at slido.com by using the event code SME Verification. However, we ask you to limit your questions to the material that will be presented today or if you have any technical issues. We will try to answer as many questions as we can by 3 p.m. Helsinki time. If you have any other questions, you can always contact ECHA Help Desk by using the link on your screen. Please be aware as well that this is a public chat, so we ask you not to share here confidential information. The webinar of today, the presentations, and the question and answer transcript will be published and the material will be available from the ECHA's webinar page visible on your screen. The agenda today will start with an introduction of the SME definition and the benefits in terms of fee reductions, as well as how to calculate the company size. We will continue with some important information regarding the assessment process. And we will end the webinar with some relevant case studies and important key messages. Let's begin with the SME definition and fee reductions. As mentioned, we will start with the definition of SMEs and the role of the SME verification team here at ECHA. And you will learn what considerations should be taken into account when assessing your company size. An SME is a micro, small or medium-sized enterprise according to the Commission recommendation number 361 from year 2003. To determine whether or not a particular enterprise falls within the recommendations definition of an SME, it is necessary to test the enterprise against certain ceilings relating to staff headcount, turnover, and balance sheet totals. In other words, to fall within the definition of an SME, the enterprise must stay below the staff headcount ceiling and fall below at least one of the turnover and balance sheet total ceilings. Please, before you declare your size, get familiar with the relevant EU definition. The recommendation can be easily found on ECHA's webpage under the Support tab and then click on Small and Medium Enterprises. There, you can find the link to the recommendation and other useful information on how to assess the company size. On this slide, you can see the Commission recommendation qualification criteria for each of the size categories: micro, small, and medium. Broadly speaking, recommendation number 361 from year 2003 defines enterprises as micro, small, or medium by reference to various ceilings relating to staff headcount, annual turnover, and balance sheet totals. These ceilings are not necessarily calculated solely by reference to the enterprise itself. Where an enterprise is not autonomous, it may be necessary to take account of the headcount, turnover, and balance sheet totals of other enterprises to which it has connections. Therefore, in order to apply these ceiling tests to an enterprise, it is first necessary to identify into which of the three types of enterprise it falls: autonomous, partner, or linked. But I will come to this topic again in some of the next slides. Before that, I would like to mention that companies that have declared to be SMEs benefit from fee reductions that can be up to 95% depending on the declared company size. That's the reason why ECA needs to verify the eligibility of such fee reductions in order to ensure fair competition and equal treatment to all registrants. It is ECA's responsibility of checking the size category of companies who claim to be eligible for SME fee reductions. Therefore, if you indicate in REACH-IT your company as micro, small, or medium-sized, and therefore claim to be entitled to the SME fee reductions, ECA may carry out at any time the SME verification of your company. Note that according to Article 13, Paragraph 3 of the Fee Regulation number 340 of year 2008, the agency may request at any time evidence that the conditions for a reduction of fees or charges or for a fee waiver apply. What to consider when assessing your company size? In the following slides, you will learn more about the importance of the ownership structure, what are the exact years of references that you need to consider when assessing your company size, which number of staff headcount and financial amounts to consider, and how to compare them at the end with the Commission recommendation ceilings. The SME definition distinguishes between three different categories of enterprises: autonomous, partner, and linked enterprise. Each category corresponds to a type of relationship that an enterprise could have with another. This distinction is necessary in order to establish a clear picture of an enterprise's economic situation and to exclude those that are not genuine SMEs. In determining whether or not an enterprise is an SME, the enterprise's size in terms of employees, turnover, and balance sheet total is not the only factor that should be taken into account. In fact, an enterprise can be very small in these terms, but if it has access to significant additional resources, for example, because it is owned by, linked to, or partnered with a larger enterprise, it might not be eligible for SME status. For enterprises with a more complex structure, a case-by-case analysis may therefore be required to ensure that only those enterprises that fall within the spirit of the SME recommendation are considered SMEs. Please do not forget that the ownership structure is to be established at the time of each submission in REACH-IT. So let's start with the category of autonomous enterprise. In general, an enterprise is autonomous if it is not classified as a partner or linked enterprise within the meaning of Article 3 of the Annex to Commission recommendation. What does it mean? It is either totally independent in terms that it has no participation in other enterprises and no enterprise has a participation in it, or it has a holding of less than 25% of the capital or voting rights. Remember that you should always consider whichever is higher in one or more other enterprises, and or any external parties have a stake of no more than 25% of the capital or voting rights, again whichever is higher in the enterprise. Or it is not linked to another enterprise through a natural person in the sense of Article 3, Paragraph 3 of the Annex to the Commission recommendation. In the case of an autonomous enterprise, the ceiling tests are applied solely by reference to the accounts of the enterprise itself. Please note that it is possible to have several investors, each with a stake of less than 25% in an enterprise, and still remain autonomous, provided these investors are not linked to each other. If the investors are linked, the enterprise may be considered a partner or linked enterprise depending on its specific situation. An enterprise may still be considered autonomous and thus as not having any partner enterprises, even if the 25% threshold is reached or exceeded by any of the types of investors listed in Article 3, Paragraph 2 from A to D of the Annex to the Commission recommendation. One or more of those investors may individually have a stake of up to 50% in an enterprise, provided they are not linked, either individually or jointly, to the enterprise in question. Let's now take a look at the category of partner enterprises. This type of relationship describes the situation of enterprises that establish certain financial partnerships with other enterprises without one exercising effective direct or indirect control over the other. Partners are enterprises that are neither autonomous nor linked to one another. Partner enterprises are enterprises that are not linked, but where one of them holds either on its own or in combination with other enterprises with which it is linked 25% or more of the capital or voting rights in the other. But among other things, the enterprise's voting rights in the other enterprise or vice versa do not exceed 50%. Where an enterprise is a partner enterprise, the ceiling tests are applied to figures based on the accounts of the enterprise after inclusion of a proportion of the figures from the accounts of any partner enterprise. Here, I would like to bring your attention to the case of public bodies. An enterprise is not an SME according to the definition if 25% or more of its capital or voting rights are directly or indirectly owned or controlled, jointly or individually, by one or more public bodies. The reason for this stipulation is that public ownership may give certain advantages to enterprises, notably financial, over other enterprises that are financed by private capital. The types of investors listed in Article 3, Paragraph 2, second subparagraph to the annex of the recommendation, such as universities or autonomous local authorities, which have the status of a public body under national law, are not concerned by this rule. They may hold a participation of between 25% but no more than 50% in an enterprise without losing their SME status. Above 50%, the enterprise cannot be considered an SME. And finally, let's now observe the category of linked enterprises. Broadly, linked enterprises are those in which one enterprise is able to exercise control, either directly or indirectly, over the affairs of the other. Two or more enterprises are linked when they have any of the following relationships. One enterprise holds a majority of the shareholders or members' voting rights in another. One enterprise is entitled to appoint or remove a majority of the administrative, management, or supervisory body of another. A contract between the enterprises or a provision in the memorandum or articles of association of one of the enterprises enables one to exercise a dominant influence over the other. One enterprise is able by agreement to exercise sole control over a majority of shareholders or members' voting rights in another. A typical example of a linked enterprise is the wholly owned subsidiary. A company will also be considered to be linked if a relationship exists through an individual or group of individuals acting together under the condition that the companies are engaged wholly or partially in the same markets or in adjacent markets. Where an enterprise is a linked enterprise, the ceiling tests are applied to the aggregates of the figures in its own accounts and those from the accounts of all other enterprises to which it is linked. Once you have established the correct ownership structure of your enterprise, You should determine the reference years for the establishment of financial and headcount data of your enterprise in accordance with Article 4 of the Annex to Commission recommendation. You should start with year of each concrete submission in REACH-IT. Then, apply data related to latest approved accounting periods for staff headcount and financial amounts. Remember that those should be calculated on an annual basis. For newly established enterprises, the data to be applied is the one from a bona fide estimate made in the course of the financial year. On this slide, you can see some examples of the correct years of reference depending on the date on which the submission in REACH-IT is done and depending on the company's year end. What happens if at the date of closure of accounts, your enterprise goes above a particular threshold? Article 4, paragraph 2 provides stability and certainty to companies that are close to the ceilings and risk exceeding them temporarily during an exceptional year and/or in volatile markets. Thus, if an enterprise exceeds the headcount or financial ceilings during the course of the reference year, this will not affect its situation and it will retain the SME status with which it began the accounting year. However, it will lose SME status if it goes above the ceilings for 2 consecutive accounting periods. Conversely, an enterprise may gain SME status if it was previously a large enterprise, but then fell below the ceilings for 2 consecutive accounting periods. The purpose of Article 4, paragraph 2 of the SME definition is to ensure that enterprises that experience growth are not penalized with loss of SME status unless they exceed the relevant thresholds for a sustained period. In line with this intention, Article 4, paragraph 2 does not apply in the case of enterprises that exceed the relevant SME thresholds as a result of a change in ownership following a merger or acquisition, which is usually not considered temporary and not subject to volatility. Enterprises that are subject to a change in ownership need to be assessed on the basis of their shareholder structure at the time of the transaction. Therefore, the loss of SME status may be immediate. Now let's take a look how to correctly establish the staff headcount. The staff headcount is expressed in annual work units. Staff includes the following: employees, persons working for the enterprise being subordinated to it and that are considered to be employees under national law. Remember that this can also include temporary or so-called interim employees. Owner managers, and partners engaged in a regular activity in the enterprise and benefiting from financial advantages from the enterprise. In the staff headcount, you should not include apprentices or students who are engaged in vocational training and have apprenticeship or vocational training contracts. Employees on maternity or parental leave, should also not be included in the staff headcount calculation. To determine the staff headcount, include all full-time, part-time, and seasonal staff members. The staff headcount of an enterprise represents the number of full-time person years attributable to people who have worked within or for the enterprise during the year of consideration. So the contributions of part-time workers or those who work on a seasonal or temporary basis count as appropriate fraction of a full-time person year. The annual turnover is determined by calculating the income that your enterprise received during the year in question from its sales and services after any rebates have been paid out. Turnover should not include value-added tax or other indirect taxes. The annual balance sheet total refers to the value of your company's total assets. For more details regarding the definitions of turnover and balance sheet total, please consult Council Directive number 660 of 25th of July 1978. It is necessary to note that while it is compulsory to respect the staff headcount thresholds, an SME may choose to meet either the turnover or balance sheet ceiling. It does not need to satisfy both and may exceed one of them without losing its status. Only after having established the relevant headcount and financial figures in line with the explained steps, check if the data meets the staff headcount ceiling and one or both of the financial limits in the following table to determine if the company can be considered a micro, small, or medium-sized enterprise. Whether an enterprise draws up consolidated accounts or not, the ultimate data to consider should include the data of the company itself, any partner company, any company linked to it, any company linked to any of its direct partners, any of the companies linked to its linked companies, and any of the partners of the linked companies. As you can see, there are many things that need to be taken into consideration when assessing your company size. However, I hope that now you are better prepared on how to establish the ownership structure of your enterprise and, accordingly, how to correctly assess your company size category. Now, I will pass the floor to my colleague Sarah, who will introduce you to the SME verification assessment process here in EC.
Thanks, Lazarina, for your presentation. My name is Sarah, and now we will go through the SME verification assessment process performed by ECA. In particular, I will show you how is the SME verification performed by ECA and what is the outcome of the SME verification. How is the SME verification performed by ECA? First of all, it is important to know that ECA, before initiates the SME verification, informs the companies constantly through newsletters and alerts and invites all the companies that have declared to be eligible for the fee reductions to reassess their size in case there was a mistake in the declaration. The SME verification process starts when ECA sends to your Rich IT account an official letter, the request for documents. In the letter you will find in details which documents and information are requested and the deadline by when the complete set of documents should be sent or uploaded in Rich IT. Please keep in mind that at this stage, ECA cannot rely anymore on self-declarations, but it is requesting official documents. Once ECA has received all the necessary documents, we'll start the analysis of the company size. It could be that at this stage you may be contacted by ECA asking for additional information or some clarifications. Finally, when the verification is concluded, ECA communicates the result to your Rich IT account. As I said before, the SME verification starts when you receive on your Rich IT account a request for documentary evidence. The documentary evidence should include official documents showing the ownership structure at the time of each submission. In fact, the first step to define the company size category is to identify the ownership structure as at the time of each submission in Rich IT. In accordance to the Article 3 of the Annex to the Recommendation 2003-361, all partner-linked enterprises upstream and downstream, must be taken into consideration. The next step is to establish the financial data for the company and for all linked and partner enterprises, in accordance with the Article 6 of the Annex to the recommendation, which means that the company must send financial accounts or tax declaration and annual reports for the 2 latest approved accounting periods preceding the dossier submission in Reach IT. The same documents are requested also for all partner-linked enterprises. If the company draws up consolidated account or it is included in the consolidated accounts of another company, this should be provided as documentary evidence. The company should also submit official documents showing the number of annual work units for the 2 latest approved accounting periods preceding the dossier submission in Reach IT. Also in this case, the same documents should be sent for all partner and linked enterprises. As per Commission recommendation, the criteria of staff number must be observed as the main criteria in order to define in which category an enterprise falls. In general, the staff headcount should include not only the full-time employees or only the employees directly involved with ECA activities, but also seasonal workers, owners and managers, and all the people who engage their activity in the enterprise and benefiting from financial advantages from the enterprise. In case of part-time employees or seasonal workers, the annual working unit should be calculated as an appropriate fraction. When we receive all the documents needed, we will analyze them. As I said before, at this stage you may be contacted by ECA if additional information are required or in case we need some clarifications on the information you have submitted. Usually we contact companies by email asking for additional information using the contact details you have introduced in Reach IT. During the SME verification process, the team is always available to provide support to the registrant and answer to their questions. If you have made a mistake in the size declaration, please consult ECA's SME webpage on what to do if you incorrectly indicated the SME size category. In this section, you can find instruction on how to avoid the administrative charge in case you have made a mistake in the size declaration, but ECA has not initiated the SME verification yet. You can also benefit from a 50% reduction of the administrative charge in cases where you have incorrectly informed ECA about the enterprise category and you have already been approached by ECA to verify the size category of your company or the company that you represent as only representative. As I said, in this case, please follow the instructions on the SME web page and follow the link that you see on the screen. Now I will go through the outcome of the SME verification. Once ECA has analyzed the documents you have submitted, we send to your Reach IT account the decision. In this case, it can be that the verification confirms the size you have declared at the time of the submission. Then you will receive an official letter to your Reach IT account which confirms the size, and no supplementary invoice is sent. If the size you have declared is not correct, and you have benefited from reduced fees, you will receive a top-up invoice which covers the difference between the fee you have paid and the fee you should have paid, accordingly with your company size. You will receive also an administrative charge invoice. Consider that the failure to provide sufficient documentary evidence will also lead to the conclusion that the company was not eligible for the reduced fees. The company will thus receive a top-up invoice and an administrative charge invoice for non-SME. The level of the administrative charge depends on the size you have declared at the time of the submission and the size after the ECA assessment. The financial gain is also the difference between the reduced SME fees incorrectly paid and the fees applicable to the correct company size category. Following the decision on the size of the company, registrant can receive an invoice, top-up invoice and administrative charge invoice, and they have to pay the invoice within the set deadlines. In the event that the registrant does not pay the full amount by the set time limits, ECA will revoke the decision by which previously accepted the registration. Once the registration is revoked, the substance cannot be placed in the market, following the principle no data, no market. Even if the registration is revoked, the administrative charge remains due. Not paying the administrative charge will lead to legal actions. Finally, I would like to remind you where you can find the decision and invoices. Please consider that all the documents should be uploaded on your Reach IT account. We recommend always to check regularly your Reach IT account once your Reach dossier has been submitted, as it is the main communication channel used by ECA. Check regularly your task section, since it's there where you can find decisions and invoices or all the important information which require an action from your side. It is also important to keep your Reach IT account up to date, because every time you receive a new task, an email will be sent to the email address you have provided. Now my colleague will talk about the ownership structure and some calculation example. Thanks for your attention and have a good day.
Thank you, Sarah. Good morning, everyone. My name is Thomas, and I am working in the SME team at ECA. My colleagues have presented you with legal text, concepts, and how to theoretically determine the size of your enterprise or the enterprise you represent. In this part, I wish to make things more practical by presenting several examples. The ownership structure schemes shown in the following slides will help you to determine which enterprises should be included in the calculation to assess the size of your enterprise and which enterprises should be excluded. In the following slides, we will focus on three basic ownership structure schemes. Case 1 will be about linked partner enterprises and linkages to natural persons. In case 2, we will focus on indirect linked and partner enterprises. Case 3 will deal with the specific situation of a group of linked enterprises. In the last part of this case study, I will present a table with random headcount, turnover, and balance sheet total numbers. This table will guide you on how to determine the size of an enterprise when headcount and financial data have been gathered and aggregated. Before we start, I wish to highlight that we have prepared the following cases simply as illustrative examples. Please be aware that these cases do not cover all possible scenarios. As my colleagues mentioned before, the Commission recommendation on the definition of SMEs, number 361 from year 2003, is the sole basis for the verification of the SME size categories. This recommendation should always be the starting point when assessing your enterprise size. So, prior to the declaration of your enterprise size, please always refer to this recommendation. Case study 1, linked and partner enterprises, linkages to natural persons. So, here is the first slide for case study 1. As an introduction, please remember that ownership structure must be determined at the time of the submission in which I. Here, we have an enterprise A, which is our registrant, our rich registrant, or the enterprise represented by an only representative. It is the enterprise of which we wish to determine the size. The first question that each enterprise has to ask itself is, am I an autonomous enterprise? So, is A an autonomous enterprise? My colleague Lazarina already gave you the definition of what an autonomous enterprise is. Let's repeat it here. The recommendation states that, basically, an enterprise is autonomous only if it has no participation or a participation of less than 25% in the capital or voting rights in other enterprises, and no enterprise has a participation in it or the participation is less than 25%. Suppose that our enterprise A is fully owned by a natural person. Suppose that this natural person only owns shares in A. Suppose lastly that enterprise A does not own more than 25% in the capital or voting rights of other enterprises. Then enterprise A is autonomous. In this case, we would simply have to take into account the headcount, balance sheet total, and turnover of A to determine its size. It's quite simple. So, what we have to do is to make sure whether our enterprise is autonomous or whether it has partner or linked enterprises. More precisely, we're asking ourselves, who are the shareholders of enterprise A, and does enterprise A have more than 25% participation in other enterprises? And as we can see, A turns out to be a wholly owned subsidiary of enterprise B. In addition, our enterprise A owns 80% of the stakes of enterprise C. This means automatically that our enterprise A is to be considered as linked to enterprise B and C, as per Article 3.3 of the recommendation. My colleague Lazarina already gave you the definition of what a linked enterprise is. In our case, enterprises A and B are linked because B owns the majority of the shares of A. Also, enterprises A and C are linked because A owns the majority of the shares of C. However, here, I want to stress out that the linkage of one enterprise to another is not always related only to the majority of the voting rights or in capital, but also to the different exercises of influence that the enterprises may have into each other. For more details, please consult Article 3.3 of the Commission recommendation. So, in our case, we know that A is directly linked to B and C. As a result, we can already state here that 100% of the headcount, balance sheet total, and turnover of A, B, and C will be used to determine the size of enterprise A. The next question is, do we have all the information required? The answer is no. Some enterprises very often think about the ownership structure only in relation to their direct shareholders or subsidiaries. However, it is very important to remember that the enterprise's ownership structure includes not only the direct shareholders or subsidiaries of an enterprise, but also the indirect ones. So, the next questions are, first, does enterprise C have participation in other enterprises? Second, who are the shareholders of enterprise B? Question 1. Does enterprise C have participation in other enterprises? On the scheme, we can see that enterprise C owns 25% of the shares of enterprise B and 20% of the shares of enterprise B. As the percentage of shares is less than 50%, these enterprises cannot be linked to enterprise A. They are not linked enterprises. However, can we consider them as partner enterprises? Again, my colleagues already provided you with a definition of partner enterprises. As a reminder, an enterprise is a partner enterprise if the enterprise has a holding equal to or greater than 25%, but no more than 50% of the capital or voting rights in another enterprise. From this definition, only enterprise D can be considered as a partner enterprise to enterprises C and A. As enterprise C owns less than 25%, actually 20%, of the shares of enterprise E, E is to be excluded from ownership structure and calculation to determine the size of enterprise A. Now, question 2. Who are the shareholders of enterprise B? We can see here that Mr. John Smith is the majority shareholder of enterprise B. A linked enterprise to our registrant. We can also see that in addition to enterprise B, Mr. John Smith fully owns the shares of two enterprises, F and G. As already mentioned by my colleague Lazarina, enterprises can be linked enterprises if the two following criteria are met. First criteria, they are linked to a natural person or a group of natural persons acting jointly. This is the case here with Mr. John Smith, as he owns more than 50% of the shares of enterprise A, our registrant, and more than 50% of the shares of enterprises F and G. Second criteria, the enterprises engage in their activity or in part of their activity in the same relevant markets or in adjacent markets. This is the case here for enterprise F, which is said to engage in the same relevant market as A. However, this is not the case for enterprise G, which operates on a different market. As a result, the data of enterprise F will be included in the calculation, but not the data of enterprise G. You can see that the other shareholder of enterprise B, Mrs. Andu, owns 30% of enterprise B. Note that even if Mrs. Andu would fully own other enterprises, engaged in the same market as A, those enterprises would not be included in the calculation, unless Mrs. Andu is able to exercise control over enterprise B, which is not the case here. Calculation now, we will have to add for each of the enterprises in the formula a given percentage of their headcount, balance sheet total, and turnover. Here we have 100% of A, B, and C, plus 25% of D, and 100% of F. Now, phase 2, indirect linked and partner enterprise. As mentioned before, it is very important to remember that the enterprise's ownership structure also includes indirect shareholders or subsidiaries, not only direct ones. In this case, Enterprise A is our registrant. The sole owner of Enterprise A is Mrs. Dean Makeda. We assume that Mrs. Dean Makeda does not own shares in any other enterprises than A. Enterprise A directly owns 100% of the shares of Enterprise B, which is clearly a linked enterprise to A. Enterprise A also owns 40% of the stakes of Enterprise B, that is more than 25%. It is therefore a partner enterprise to A. So far, so good. Is that all? Actually, no. As we can see here, the downstream ownership structure extends to other enterprises. On the left side of the slide, we have Enterprise C. We must include 30% of the data of this Enterprise C into calculation. Indeed, Enterprise C is a partner enterprise to Enterprise B, which is itself a linked enterprise to our registrant, Enterprise A. Also, on the right side of the slide, we see that Enterprise D owns 100% of the shares of Enterprise F, which itself owns the majority of the stakes in Enterprise G. Since Enterprise D is a partner enterprise to Enterprise A, Enterprises F and G must also be considered as partner to Enterprise A. This shows how far the ownership structure can go. However, there are limits to the enterprises that can be included into calculation. Partners of partners must be excluded from the ownership structure. This is why Enterprise E, partner of Enterprise D, itself a partner of Enterprise A, will not be taken into account. Calculation, we'll have to add for each of the enterprises in the formula a given percentage of their headcount, balance sheet total, and turnover. So here it will be 100% of A and B, and 30% of C, and 40% of D, F, and G. Now, case study 3, group of linked enterprises. On this slide, we can see that Enterprise A has 3 shareholders, majority shareholders since the third part. To make it simple, we will assume that he only has stakes in A and not in any other enterprises. The 2 other shareholders are Enterprises B and C, which are holding 20% each in the stakes of Enterprise A. We see right away that the shares that Enterprises B and C hold in Enterprise A are not exceeding 25% for each enterprise. As a result, at first sight, it seems that Enterprises B and C are not partner enterprises to Enterprise A. This means that their data should not be taken into account to determine the size of A. However, Article 3.2 of the recommendation, which defines partner enterprises, states that an enterprise is considered to be a partner enterprise if it is holding individually or jointly to other linked enterprises 25 or more % in the stakes of the enterprise in question, and of course, not more than 50%. So, the question here is, are enterprises B and C linked enterprises? In order to answer that question, we have to know who the shareholders of these two enterprises are. We have the answer on this slide. We see here that enterprise D is holding 100% of the shares of enterprise B and C. This means that enterprises B, C, and D are linked enterprises within the meaning of Article 3.3 of the recommendation. These three enterprises are the group of linked enterprises that are holding 40% in total, 20 plus 20, of the stakes of enterprise A. This means that enterprise A is to be considered as a partner enterprise of enterprises B, C, and D. Our ownership structure is therefore complete. As for the calculation, we will have to add for each of the enterprises a given percentage of their headcount, balance sheet total, and turnover. 100% of A, 40% of B, C, and D in this. Note that if enterprises B and C have, for example, each owned 30% of the shares of enterprise A, and if the shares owned in those two enterprises by enterprises D were as shown in the current graphic, then B, C, and D would have to be considered as linked to enterprise A. In this case, we would take 100% of the data of all the enterprises shown in the graphic. Once the ownership structure has been established, that is, once you know which enterprises must be included in the calculation, you must add the headcount, turnover, and balance sheet total of all enterprises. You can then refer to the ceilings set by Article 2, the Commission recommendation, to check your size. These ceilings have already been presented to you by my colleagues, and they are shown on slide 23 of this presentation. In the calculation examples table, you can find 8 numerical examples. Those are just examples and cannot, of course, exactly reflect a specific case. I am not going now to speak in details about these examples, but I wish to highlight 3 important topics. First topic, the years to consider. The financial and headcount data to be used to assess the size of an enterprise are the ones of the 2 fiscal years previous to submission. It's not only 1 year that you have to take into account, but 2. For the specific case of an enterprise that changes size from 1 year to another, please consult Article 4.2 of the Commission recommendation. Second topic, the importance of the headcount criterion. The criterion of staff number must be observed as the main criterion for determining in which category an enterprise falls. See examples here of line 3 and 8. On line 3, even though both financial data will qualify the enterprise as macro-sized, both are less than 2 million euros, the enterprise's size is small, simply because headcount is equal to 2. The same situation is found on line 8, where both financial data are under the ceilings for small enterprises, less than 10 million euros. However, since headcount is more than 250 employees, the enterprise is large. However, note that even if the headcount on its own would qualify an enterprise as an SME if both financial ceilings for SMEs are exceeded. The enterprise will be assessed as large. This is the case on line 5, where headcount is 15, but both annual turnover and balance sheet total are 60 million euros. In this case, the enterprise is large. Third topic, the importance of the word "or" between turnover and balance sheet total that you can see on the ceiling slide, that is slide page 23. The SMEs in general are enterprises that employ fewer than 250 people and which have an annual turnover not exceeding 50 million euros and or a balance sheet total not exceeding 43 million euros. So this means that either the turnover or the balance sheet total has to be below the threshold, but not necessarily both, in order to qualify for an SME. In example line 7, we can see that the annual turnover, 60 million euros, is exceeding the threshold for medium enterprises. However, the enterprise is still a medium-sized enterprise, since the balance sheet total does not exceed the threshold for medium-sized enterprises. 50 million euros here is less than the threshold of 43 million. Also, the count is less than 250 employees. This concludes the part on the case studies. Please note that you can find other examples of ownership structure schemes in the user guide to the SME definition. The user guide is available on ECA's website. A link to it can be found in the useful links slide at the end of this presentation. As a conclusion, I would like to give you a few key messages from the presentation we have just made and present you with the most important documentation on SMEs. First, take-home messages. The first message is to get familiar with the Commission recommendation on the definition of SMEs, as it is the sole basis for the assessment of the SME size categories. In this regard, very often, the submissions in HIT are done physically by scientists who certainly know the technical details of substances, but not necessarily all the financial data of the enterprise that employs them. So, in order for this person to be sure that he or she is not declaring a wrong-size enterprise, it is important for that person to consult the finance or accounting departments of the enterprise. Also, as I mentioned before, not only the data of your own enterprise is to be included in the calculation, the data of potential linked and partner enterprises must also be taken into account. Also, if your enterprise is drawing up consolidated accounts, or if it is included via consolidation in the accounts of another enterprise, please always remember that you have to use the data from these consolidated accounts. Very important for the only representatives, they have to declare the size of the non-EU manufacturer that they represent, and not that of their own. Concerning your HIT accounts, make sure you have uploaded all relevant documents at the time of each registration. By relevant documents, I mean that ECA cannot rely on self-declarations, but needs the actual documents supporting the declared size in HIT. Also, please keep the enterprise size and the contact details updated in your HIT at all times. Finally, it is important that you regularly check your HIT account, as it is the main channel of communication used by ECA. In particular, check the task section, as you may receive important information that require an action from your side. Be proactive, avoid the administrative charge, A very important message is that if you find out, for example, at the end of this presentation, that you declared your size wrongly in HIT, it may still be possible to avoid the administrative charge. However, it is possible only in case you inform ECA prior to the start of the SME verification process. Please note that the verification is considered initiated once ECA has sent you an official request to HIT to provide documents supporting the declared size. If you believe that you declared your size wrongly, please go to ECA's website and inform ECA by filling a help desk web form in which you specify the submissions which are affected. Last message, as my colleagues mentioned in the beginning of this presentation, if after the SME verification, it turns out that your enterprise size was wrongly declared, you will receive supplementary top-up invoices and administrative charge. It is important to know that the non-payment of those invoices will have severe consequences, including the revocation of the registration. Therefore, it is important for you to pay the invoices. Now, useful links. In this slide, you can find very useful links to SME links. The first link is to the Commission recommendation 361 from 2003. As already mentioned, a very useful link is the one to the user guide, the new SME definition. In this guide, in addition to a recap of the legislation on SMEs, you will find some practical examples and case studies that could be helpful to assess your enterprise size. A third link is to the Commission Regulation 340 from 2008, the so-called fee regulation. This regulation lists the fees that the enterprises have to pay under which. Also, the Management Board Decision number 14 from 2015. This decision deals with the administrative charge to be paid by enterprises in case they declare their size wrongly. I highly recommend to go to our SME web pages where you will find all necessary information to assess your size. The Reach IT User Guide will help you to familiarize with the Reach IT tool. And lastly, you will find a Q&As that might help you to find answers to most questions asked about SMEs. Also, please note that the webinar will be open until 3 p.m. Helsinki time to answer all questions you may have regarding how to determine your company size. If your questions are not answered, please contact us at eka.europa.eu/contact. Also, note that you will have the possibility to see a recording of this presentation on ECA's web. That was the last slide of this presentation. I want to thank you all for listening and for your time. Remember that the SME team is always available to help you if needed. I wish you a very nice day on the part of myself, my colleagues, and ECA.